alluded this sell-in premium, right? Right now, what works, VIX is above, even though right now you have to be careful because VIX market is very complacent. VIX is at 20, right? That's the historical average. It's been above 20 throughout this year. It kind of pulled back to its lows. So people are complacent, right? All that means is that majority of the people believe that we are in soft landing, that Fed will stop raising interest rates sooner than later, right? Complacency. Being emotionally intelligent is extremely important because, you know, we go through these labeling exercises and we would say, well, what is the one word that describes how I feel? If you feel like complacent or relaxed in trading, that might be an issue, right? Maybe it makes sense to, when everybody's complacent, you buy your hedges, right? When everybody is panicking, maybe, you know, it's time to start buying stocks, right? So that's kind of, always observe your emotions and feelings. So VIX is low. Iron Condor, you just have to be careful. But again, especially with earning strategies, today example DBX, right? I sold DBX put. Let's go over this trade yesterday, right? Iron Condor chart asked 30 to 60 days. I know earning strategy, some people do 30 to 60 calendar spreads, very popular strategy. I do it a little bit differently. You know, if you do 30 to 60 days, you have to wait longer. You only have 4 positions. You buy DBX, you might have to wait, you know, a few weeks or a few months until this trade is over. So I'm a little bit less patient. I'm taking a little bit more risk than if you do calendar spreads. But, you know, it's a well-defined risk. So this is an example of Iron Condor, right? I sold 26.5 call, sold 21 put. I collected 13 cents. And close the trade, right? Immediate question, people send me emails or support ticket says, okay, Vlad, you made 13 cents, right? That's one contract, it's $13, right? So, you know what, $13 is, you know, I pay for coffee more than $13. That is the most common mistake, right? To think, not that you're paying $13 for coffee, but that you think that you just made 13 cents, right? If it's a $1,000 stock, right, and you made 13 cents, okay, fine, I would agree with you. But if it's a $20 stock, you have to calculate what 13 cents. 13 cents out of $21 stock, this is a 0.5%, right? You just made 0.5% holding position overnight, right? First of all, tell me where you can invest your money and get 0.5% return a day, right? So that's already should kind of spark curiosity. And then the idea of, the third thing that I want you to get out of this presentation is compounding investment, right? Unfortunately, you know, a lot of people are asking me, Vlad, tell me the stock that you think is going to triple, you know, in the next few months. And usually I will tell them these 10 baggers, triple baggers, whatever you want to call them. This is not, you know, I don't look for home runs, right? Some companies do. Some people say, well, this is a new company. It's going to revolutionize the industry. Maybe in the bull market, maybe it's a good strategy in the bull market. In the bear market, most of these companies have negative cash flow. And then the better question is, how long will these companies survive? Like, how long will Beyond Meat survive, you know, burning $100 million, you know, in cash if they have $1 billion in their balance sheet? Well, the answer is, you know, 10 to 12 months, right? And who's going to willing to give them new loans, right? With the new, you know, high interest rates rising and, you know, sentiment at historical lows, right? So this is probably not an environment where you look for home runs, right? Even though I like home runs, you know, you know, there's nothing wrong with home runs. It's just I kind of, as I get older, I realize it's hard to do home runs. But single hits are also fine, right? It's 0.5%. It's a single hit. And the way I look at this, let's say you do 5 trades every day. You do earnings. You know, there's more than one company announcing earnings. Obviously, earnings season, the earnings almost every single day. Throughout the year, there's some companies announcing earnings. There are some weeks where there's a lot of companies. There's some weeks there's only one company. But let's say 5 days a week. Let's say right now the percentage correct is 90%. So let's say you did 4 trades based on past performance, right? That doesn't guarantee you the same result, but let's assume past performance. So you have 4 trades where you made 0.5%. Let's say 1 trade you lost 1%, right? Or 2%. So 4 times and a half. Half is, let's say, 2%, right? So you made 2%. 4 times you have 2%, and 1 trade went against you. Let's say you lost 1%. So, and that's your goal. Let's say, so that means in 1 week, you made 1% return, right? If you just do 1 trade a day or 5 trades a week, however you want to do this. If you do it in a month, right? If you convert this into a month multiplied by 4, then you made 4%. And if you multiply it by 12 months in a year, that's 48%, right? If you can do 48% return or 24% return, you're a superstar in a bear market. Very few people are able to do this. So compounded investment is an extremely important concept in life, right? If you want to improve your relationship with kids or with your spouse, how do you do this? It's compounding investment, right? It's the, taking them, buying flowers for your spouse, taking your kids to play golf. These little investments, they will compound, right? So whether it's a relationship or trading, it's all about compounding investment. Original trades, so I'll go over. All right, so I encourage you to do compounding